Hi, hello. I'm Dr. K. Pungodi, Assistant Professor in Department of Commerce. Now we are going to discuss about the subject management accounting, that is also known as accounting for decision making and also managerial economics. In the above slide, we have discussed about introductions of management accounting and how the evaluation of management accounting appears and what are the importance of management accounting we have discussed. In this slide, we are going to discuss about the scope of management accounting. The first thing is that the scope of management, it is a very wide because it covers all areas of accounting and financial analysis that assist the management in planning, controlling, coordinating and decision making. Management accounting collect the informations from various analysis and present it in the useful form to help the managers to achieve an organizational objectives efficiently or efficiency. The scope of management extend beyond the traditional accounting. It includes the financial accounting, cost accounting, budgeting, performance and strategy planning. So we are having a different forms of scope of management. The first thing is that financial accounting. Management accounting utilize the information generating to the financial accounting, financial statements such as trading, profit and loss account and balance sheet, provides the valuable data for managerial analysis and decision making. Its importance is that providing the historical financial information helps assess the profitability and financial position, forms a bias for future planning. Example, a manager may analyze the previous year profit statement to forecast the future sales and profit. The next one is cost accounting. In this cost accounting, it is an important component of management accounting. It provides about the cost of product, services, department activities. Next, its importance is that determines the product cost, helps in cost control and cost reduction, assist in pricing decision. Next thing is that we are having a different techniques over here: standard techniques, managerial techniques, managerial costing and also activity based costing over. Example, a manufacturing company calculate the cost per unit to determine the appropriate selling price. The next thing is financial statement analysis. Management accounting involves the analysis of financial statement through the various techniques to evaluate the business performance. Here we are having following the different techniques over here. The first thing is ratio analysis, comparative statement, trend analysis and common size statement. The next thing is that importance. In this importance, we are having measuring the profitability, evaluating the liquidity and solvency, assessing the operational efficiency over here. Example, the current ratio helps the management determine the firm's ability to meet these short-term obligations. So that is known as current ratio. Next thing is budgeting and budgetary control. In this budgeting and budgetary control, it is the process of preparing a detailed plan for future operations. Budgetary control compares actual performance with the budgeted performance. Here we are having a different types of budget over here. We are following the different types of budgets. First one is sales budget, production, cash budget, capital expenditure budget and master budget over here. Next, the important thing is that facilitating the planning, controlling the expenditure, improves the coordination among the departments. The example is that a company prepares an annual sales budget to estimate the future revenue. Next thing is forecasting. Forecasting means planning and predicting the future conditions based on the past and present informations. The area of forecastings are sales, demand, cost and profit forecasting. Here we are having the importance also to reduce the uncertainty, assisting in strategic planning, help allotting the resources efficiently. Example, forecasting the future demand enables a company to plan for a production accordingly. The next thing is decision making. one of the most significant area within the scope of management accounting is assisting the management in decision making. Decision making have a support over here: make or buying decision, product mix decision, price decision, expansion decision, and investment decision. And also we are having an importance, helps in select the most profitability alternative, minimizing the risk. Example, management accounting helps in determining whether the manufacturing a component internally is cheaper than the purchasing it externally. The next thing is that cost control and cost reduction is one of the most important thing. The management accounting provides the tools and techniques to monitor the reduced cost. Cost control ensures the remaining with the predetermined standards. Cost reduction permanently reduces the cost without affecting the product quality. That's importance is improving the profitability, estimating the wastages. Example, analyzing the production cost may reveal the unnecessary expenses that can be eliminated. Next thing is performance evaluation. Here the management accounting measures the performance of department, employees and business units. That the techniques involves various analysis, responsibility accounting, key performance indicators. That's the important thing is that identifying the strength and weakness, encouraging the accountability. Examples for this is comparing the actual sales with budget sales helps to evaluate the sales department performance. Next thing is an inventory. So inventory is one of the most important thing that ensures the right quantity or a right quantity of a material is available at the right time. The next thing is we are having a different techniques in this inventory control over. The first thing is economic order quantity, ABC analysis and just-in-time analysis. And it has an why we are using this is to prevent the stock shortages and reducing the carrying cost. Example is that a company uses an economic order quantity to determine the optimum quantity for a raw materials to order. The next thing is cash flow and fund flow analysis. It analyzes the movement of cash and funds within the organization, and also it ensures the liquidity, helps the manager in working capital and supports the financial planning. Example, cash flow analysis identifies the period when the additional financial may be required. The next thing is the capital budgeting. The capital budgeting is one of the most important thing. It is a long-term investment project over here, and for that we are having a different techniques following in this management accounting. The first one is payback period. Next is net present value, internal rate of return and profitability index over here. The importance of this is to help the selected profitability investment, maximizing the shareholders' wealth. Example, evaluating whether to purchase a new machinery or expand the product planning. So next and the last thing is that management reporting. The management reporting prepares that the providing the relevant information to managers at a different level. The types of reports are daily report, weekly report, monthly report and also expectation report over here. These are all the things we are preparing in this management reporting. And also importance of this is to facilitating the timely decision making and improves the communication over here. Example, a monthly sales report helps the management monitoring performance. So that is the most important thing in this management reporting. I hope you all understand about this, about the scope of management accounting. But last but not least, that is an internal control and internal audit. So internal audit means the management accounting contributes the efficient internal control system over here, and also give the importance to prevent the frauds and errors, safety assets, ensures the operational efficiency. These are all the things take place in this internal audit or internal control, and internal audit verifies the compliance with the company's policy. Next thing is the tax planning and strategic management is also most important thing, and nowadays we are having a management information system. This will also provide the computerized system over here. So everywhere the technology has been involved in taking place. So in this the technology has been taking place through the computerized system, that is management information system. Speed up the decision making, improves the current data accuracy, and enhancing the communication over here. So ERP software generate the real-time report on sales, inventory, and production. So these are all the different scopes of the management accounting. We can conclude this scope with the financial, cost and forecasting, decision making, performance, and evaluating the inventory control over here. I hope you all understand about the scope of management accounting. Thank you.